Hi, I'm Stock Investor Davis. Welcome to the channel. We're going to take a deeper look into Air Test Systems stock today, focusing on its earnings per share and price to sales ratio, both currently and based on guidance management has provided, which in this case will bring us up to May 31st, 2024. Then we'll close by applying our findings to its current technical chart. Before we get started, please smash that like button and subscribe. There are chapters below if you want to skip ahead, and if you have any questions or notes, let me know in the comments. To begin, I have at the top Air's current earnings per share for the trailing 12 months, totaling 64 cents per share. The quarterly earnings making up that figure are in the top right. Once this was calculated, I was able to pull the company's past earnings and PE ratio results, finding a few items which we will use going forward. First, the company has only recently been profitable. Therefore, we will focus primarily on that profitable time frame of roughly the past 2 years as we make our assumptions and estimates going forward. With that in mind, I then established a reasonable range in terms of its PE ratio during that time span. In this case, a reasonable PE range has been established between 40 and 80, also noting that the average PE ratio is around 60. With our range, we then multiplied those figures to its current earnings per share of that 64 cents above, giving us a fair price range of between $26 and $51. Based on the price today, it appears to be at a good trading price. Moving to the company's current price to sales ratio, we have a similar setup to the previous slide with its current trailing 12-month sales at the top, currently totaling $74.9 million, and the quarterly sales on the top right. We then pulled the company's current shares outstanding, which is 28.6 million shares as of its last earnings report. We divide those two figures to arrive at a sales to shares figures of $2.61 per share. We'll come back to this figure shortly. Similar to the previous slide, I then pulled the company's past sales and price to sales ratio results, finding a reasonable range of between 5 and 15 times sales over the past 3 years, with an average of about 10 times sales. It's worth noting that this figure has been growing, especially over the past few years, hence why I didn't go back further. Had I focused on just the past 2 years, I'd be more inclined to have a range set between 8 and 15 times sales, with an average of 12. I say this now as I anticipate changes are going to come over time. That said, based on our current reasonable range and the current sales per share, we're able to calculate that a reasonable share price is between $13 and $39. With the current price around 28, it's a fair price, and if we factor in the increasing sales multiple average, which is closer to 12 than 10, it's on the buyer side of fair. But let's now take a look forward. Looking at management's guidance, they have provided the following projections for its fiscal year end, which is May 31st, 2024. First, their total revenue of at least $100 million, and second, the net income of at least $28 million. Using this information, we can estimate a reasonable forecast of what to expect in terms of a fair PE ratio and stock price. This, of course, requires some assumptions on our part, but with the goal of keeping things simple until more information is provided. Our main assumption for now is that the amount of shares outstanding will remain the same. If this ends up being the case, we can anticipate earnings per share of around 98 cents per share by period ending 5/31/2024. Taking this new figure and multiplying it by our reasonable PE ratio range of between 40 and 80, we arrive at a fair value range between $39 and $78. which makes the current price of $28 look even better. Keeping in mind, we're making many assumptions and a lot can happen between now and then that we just aren't going to know until we know. Pivoting to the price to sales ratio based on management's guidance, we can see the top shaded portion is the same as the previous slide, so I'm going to focus on the bottom half. With management's guidance, we can calculate a future projection for sales per share of $3.49 per share. Again, making some assumptions here, such as the amount of shares outstanding, then multiplying this forward guidance to our reasonable price to sales range of between 5 to 15 times sales, resulting in a fair value stock price between $17 and $52. The result being that current price of $28 is within that fair range, but it's now favoring more so the buyer side. As a summary for our earnings per share calculation, at the top we see where it currently stands as of today, and on the bottom we have our forecast based on management's guidance. Then, as a summary for our price to sales calculations, at the top we see where it currently stands today, and on the bottom we have our forecast based on management's guidance. Finally, to wrap up by looking at the technical chart, I've added some boxes to highlight areas to me it makes sense to either add to the position, which is in green, or to take profits, which is in red. Otherwise, with the stock currently trading at $28, it's near the bottom of our fair value range we established, and it's near a point where we marked support around $24. I like the price. Thank you for watching. Please like and subscribe.